Straight to the market action of the day. So stocks stumbled across the world after the U.S. Federal Reserve hiked policy rates by 75 basis points, taking the cost of borrowing to its highest level in 14 years. However, Indian markets managed to show relative resilience. The Sensex slipped nearly 300 points, while the Nifty slumped nearly 80 points in a volatile session. Financial stocks were the worst hit. Anuj Singhal is here with a wrap of all the action on Dalal Street. Anuj?
Well, the market was down, but not out. I mean, it showed some resilience. In fact, at one point in the afternoon, the Nifty had turned in the green. And this despite the big risk-off that we saw globally. The Bank Nifty, though, was a problem for the market today. That saw a big decline. And even though FMCG stocks participated on the upside, they couldn't really counter the weight of the Bank Nifty. The market breadth, though, today was strong through the day. The other big worry was what was happening with dollar rupee, where there was a sharp move towards 81. Banks were weak, so Axis, HDFC, Kotak, ICICI all were down, and some other prominent losers included names like HDFC and Reliance, and throw in a Power Grid as well. On the gaining side, all consumption names led by Lever, Titan, Asian Paints, Britannia, ITC and Eicher Motors were the other stocks doing well. In the F&O space, you had some gainers like Metropolis, which did well. Tata Chemicals and Page Industries made a fresh high. Well, there's clearly some big global risk-off which is happening right now. So far, our market has been resilient, but for the last couple of days, there are indications that perhaps at some point, our market may also get hurt. For now, today, the market sort of dodged a bullet.
So for now, the market showing some resilience. Thank you so much for those details, Anuj. Now, the U.S. Fed's hawkish commentary sent the Indian currency to a new low, crossing the 80 per dollar mark as the dollar index climbed to its highest level in 20 years. The rupee closed at its lowest ever level of 80.86 against the dollar in today's session. Latha Venkatesh is here to explain the rupee's fall and why the RBI didn't step in to prevent the depreciation. Latha?
Well, it's quite a historic day. For so long, the RBI had protected the 80 rupee to the dollar mark up until yesterday, as it were. And more hawkish than expected Fed has allowed the RBI to let the rupee breach that mark. In fact, it's done more. Today is perhaps, in intraday terms, at least one of the sharpest falls for the rupee in a day. All Asian currencies have fallen between 0.5% and 1%, and the rupee is at the higher end. It's fallen intraday by 1% thanks to this guidance. And it had to. I mean, this was a writing on the wall. Also, because of the China factor, the rupee has appreciated versus the Chinese currency considerably. From March, it required 12 rupees to buy a yuan. In July, you required 11 rupees 80 paise to buy a yuan. And as of yesterday, you required only 11 rupees 30 paise to buy a yuan. That's not good because we have the highest trade deficit with China. So the dollar is one reason, but the yuan is another big reason why the rupee had to be allowed to be depreciated at some point in time. And the question now in the market is, what will be the new pivot or low for the rupee? Will it get protected at 80.25? And how much will the RBI, support at the higher end? Will it be 81? Will it be 82? There are all kinds of debates, and the days to come will tell you that. The bond markets have also seen a significant fall for several reasons. U.S. yields have gone to 3.54, 56. The Indian bonds didn't adjust. A weaker rupee also means expensive imports, and that also has a bond negative, higher inflation impact. So today there was this 10 basis point adjustment. The market is also veering around to the view that India's inclusion in the JPM bond index is not imminent at all. Which means, what is the reason to buy bonds right away? There are more inflationary reasons. The market is also adjusting to the fact that come September 30, a 50 basis hike from the RBI is more likely than 35. And that explains this 10 basis point rise in spot bond yields and a 20 basis point rise in the OIS market.
All right, Latha, thank you so much for taking us through those details. Now on to a CNBC-TV18 exclusive. JP Morgan's chairman, Jamie Dimon, says JP Morgan is one of the biggest users of blockchain, but adds he remains a total skeptic on cryptocurrency. Speaking exclusively to Shireen Bhan, Dimon admitted that traditional banks are facing a lot of competition from fintech companies. He further said that there will be a lot of winners and losers in the fintech space. Take a look.
You spoke about Bitcoin, Jamie. Given the kind of volatility that we're seeing there, what do you make of it? I mean, you've always been a bit of a skeptic, but do you foresee a significant decline from the levels that we're already at?
Yeah, I wouldn't use the word a bit of a skeptic. I would say a total skeptic. But that's about a crypto token that you call a cryptocurrency that does nothing. We believe in blockchain, DeFi, ledgers, and some of these tokens that do something. So if a token could do something for you, like as part of a smart contract, or it gives you information on a timely basis you want, that's got value. I mean, we're one of the bigger users of blockchain. So, but what I'm pointing out is that, at higher rates, you have to carry the cost of it. It has no natural income from it, and therefore that will affect it.
I want to talk to you about digitization and the competitive landscape in light of what we are seeing from fintech companies. We're seeing that play out in India. Of course, fintech companies not making any money at this point in time. But how do you read this, and what does that mean as far as JP Morgan's own plans are concerned going forward?
Yeah, so we have tremendous competition, okay? Indian banks in India, German banks in Germany, obviously the big banks in the United States. Then we've got shadow banks, which are huge. They've taken over a big part of the mortgage business. They've taken over a big part of direct lending, leverage lending in the United States. They've taken a big part of trading. You hear about the high frequency traders and payment for order flow. And then you have fintech. And fintech, you got to look at, it's a huge amount of investment in it. Some of them are already quite successful. PayPal, Square, Stripe, to name a few. Others are around the fringes, data, and a whole bunch of other services. And they're good competition. They also have very little regulation relative to someone like us, so they have advantages. But a lot of them aren't profitable. They're not all going to make it. And obviously, we can spend a lot of money building great systems. So I'm for competition. I would prefer to see more of a level playing field on regulations. And then, but the other thing you didn't mention is big tech. I mean, Apple now has a P2P, buy now, pay later, credit scoring. They white label credit card and bank accounts through Goldman Sachs, and that's a bank. They don't have social requirements, legal requirements, the same AML requirements. They don't have capital requirements, registration requirements, transparency requirements. And at one point, maybe the regulators will eventually say, okay, if you do a product, the products have a certain type of regulation. And but anyway, we're going to have all the competition. I'm very comfortable about JP Morgan, but it's going to be a lot of competition, and there are going to be a lot of winners and losers.
And you can catch that full interview at 6 p.m. today right here on CNBC-TV18. The big story from Court Corner, it's a setback for Fortis Health. The Supreme Court has refused to lift its stay order on Malaysian IHH Healthcare's open offer. It has remanded the issue to the Delhi High Court. The stock tanked 20% in trade. Japanese pharma giant Daiichi Sankyo challenged IHH's proposed 31% acquisition of Fortis in an effort to hold founders Malvinder and Shivinder Singh accountable for an arbitration award of 3,600 crore rupees resulting from a fraud claim. The court today sentenced the Sikh brothers to additional 6 months jail term. And moving on, the government's draft telecom bill, which is now in the public domain for stakeholders to give their feedback, has proposed to regulate communication service offered by over-the-top platforms. That's not all. The draft bill also provides for penalty waiver to telcos on the back of payment defaults under extraordinary circumstances. Ashmit Kumar is here with more. Ashmit?
Well, the centre is seeking a major overhaul of the regulatory framework of the Indian telecom and digital communication space. Now, the centre is planning to phase out the Indian Telegraph Act of 1885 with the new telecom bill, catering to the era of 5G, IoT and Industry 4.0. Now, the draft telecom bill, as per Ashwini Vaishnav's own deadline, was put out in the public domain within this week. It is open now for public comments for about a month now. The deadline for comments is October 20th. But what has been the need for a new bill? Well, the government argues that the telecom and digital communication industry has far outgrown the Telegraph Act. The government argues that the industry today boasts of 117 crore subscribers, accounting for 8% of the GDP. As per the government, and I quote here, India needs a legal framework attuned to the realities of the 21st century, unquote. But what are these key changes? Well, number one, the definition of telecom services has been expanded to also include OTT services. What that means essentially is that for the first time, services such as WhatsApp, Signal, Telegram will now be subject to regulation under the telecom regime. Number two, The draft bill allows the government to waive off charges and fees payable by telecom players. The government can waive these levies off in extraordinary situations of financial stress or to ensure consumer interest. Number 3, the bill clearly recognizes the power of the government to assign spectrum not merely through auction, but also through allocation. This would be the first time post the 2G verdict that the law clearly provides for allocation. Number 4, under the draft bill, a telecom company under the IBC will have its spectrum revert back to the government in case of additional defaults. Number 5, and this is hugely significant, the bill will give the government the power to block certain messages from being transmitted. Not just that, the bill also equips the centre to intercept any or a class of messages. The government has justified this power by citing national security. And finally, number 6, the draft bill provides a legal backing to a uniform set of ROW or right-of-way rules to facilitate telecom infrastructure expansion. The industry, we understand, is taking time to study the bill and is yet to issue a comment.
All right, Ashmit, many thanks for those details. Meanwhile, some respite for SpiceJet pilots as the company announces a 20% salary hike from October. Sources say the salary revision follows a 6% hike announced last month. We also learned that the company has received first tranche of funds under the Emergency Credit Line Guarantee Scheme and expects the second tranche very soon. This comes 2 days after the airline sent 80 pilots on leave without pay for 3 months for cost-cutting measures. Wipro chairman Rishad Premji said the company has fired 300 employees for moonlighting and working with rivals at the same time. IT company heads have been speaking against the practice of moonlighting by their employees. Moonlighting is when employees take up other jobs after their working hours. Speaking at an event, Premji called moonlighting a complete violation of integrity in its deepest form.
The reality is that there are people today working for Wipro and working directly for one of our competitors. Right? We've actually discovered 300 people in the last few months who are doing exactly that. To me, it's a complete violation of integrity in its deepest form. So that was what I was referring to. There's no space for someone to work for Wipro and competitor X, Y, and Z, and I think they would feel exactly the same way if they were to discover the same situation. So that's what I meant, and so I do stand by what I said.
Maharashtra Deputy Chief Minister Devendra Fadnavis said that the Navi Mumbai International Airport will be made functional by 2024. This will be the second international airport in Mumbai once it becomes operational. The foundation stone for the airport was laid by Prime Minister Narendra Modi in February 2018. It's a holiday cheer for employees of online commerce company Meesho. The company, for second year in a row, has announced a reset and recharge 11-day break for all employees. With this break, the company aims to focus on holistic well-being of its staff at a time when the workforce grapples with burnout and mental health issues. The 11-day break starts from 22nd of October to the 1st of November, giving employees a breather after the busy festive sale period. The other newsmaker of the day, the Bill and Melinda Gates Foundation, has pledged over $1 billion towards tackling poverty, inequality and climate change. Speaking exclusively to Shireen Bhan, the co-chair of the foundation, Bill Gates said that he is betting big on climate-smart crops and sees seed innovation as a long-term solution to solving the world's food crisis. Take a look.
Well, we're making a big commitment. We'll go through the numbers actually at the COP27 event in Egypt, that we're going to be a big funder in seed innovation. We're already one of the biggest, and we're making a substantial increase in that. We're also talking about, as we look at climate, how do you minimize the damage, and pointing this out, in climate adaptation, which is the getting ready for the extra heat. It doesn't get enough attention, and we're not as good at measuring which interventions are the most impactful for climate adaptation, but it's very urgent that we get going on that.
If I can ask you a question that often comes up in the context of this conversation, why are you buying up so much farmland in America?
Yeah, I own, through an investment office that invests in quite a few things, about 1/4000th of the land in the U.S. So it's a very distributed thing. There's not anyone who owns, much of that land. They've decided it's a good investment. That's very mechanized agriculture, so not that similar to, who are trying to help out in Africa. So no direct connection there, but, the money that I haven't spent through the foundation. All of it will go to the foundation, but in the meantime, we invest it, try to get returns so we can have as much to send to poor countries as possible.
Let me talk to you about the pandemic. President Biden said that the pandemic is now over. We, of course, continue to have to deal with COVID. Most countries around the world have lifted all the restrictions. Vaccine distribution continues to be unequal. Large parts of the world still don't have access to the vaccine, even though supply is no longer a constraint. How do you read the pandemic at this point in time?
You know, countries are behaving, most countries, as though the pandemic is over. That is, they're not locking down, they're not wearing masks, and yet the deaths continue. We have some risk of a new variant. We hope that doesn't happen. And then we also have, you know, over the next few decades, a chance of another pandemic. And, you know, I'm hoping that the world takes the lesson and that we're better prepared to act quickly. You know, if you act at the very beginning, you can stop the global spread. You can stop it getting to billions of people. And so that dialogue has started, but not gotten as far as I would have hoped.
And you can catch the entire interview with Bill Gates, co-chair of the Bill and Melinda Gates Foundation, at 5:30 p.m. right here on CNBC-TV18. On that note, it is time for us to head into a short break, but coming up